So, in this episode, I'm speaking with someone who proves that you do not have to go viral or quit your job to build real wealth. So today, I want to welcome Robert A. Dockery. Robert, day by day, he's a respected accountant, but behind the scenes, he's built a real estate and stock portfolio that most people only dream of. He's private, low key, and very strategic. And today he's sharing what really works when you're serious about building wealth quietly and consistently. No fluff, no flexing, just straight up mindset, habits, and strategy. So I want to take the time out.
Nice to be here.
Welcome,
Congratulations.
bro. I call him Brother Robert.
Congratulations.
Yeah, thank you. I appreciate it. I am grateful for you taking time out of your schedule to be here. I know we have to go through a little scheduling, change here or there to get things done, but you're here and that's all what matters.
Well,
And today I believe we're going to have a great conversation to share a lot from your mindset. We want to learn as much as possible as we can from you, how to become great, wealthy investors.
Thank you.
So to start things off, what sparked your interest in wealth building?
Gosh, so many things. Maybe it's from when I was delivering the newspaper and I would get to the business section and see certain things that were going on and then reflecting on my own personal life and go, why is it these people are living certain type of lifestyle
Yeah.
that I am just here like struggling,
Yes.
not realizing. And just figuring that I saw my mom, how hard she was working. And I'm saying, is this it? Is there now anything else to life than just working hard?
Yeah.
And somewhere I just had to figure out along the way what must be necessary, what must I do in order to change my own perspective on life.
So your dynamics, you would say something switched off in your brain where you're just like, this can be it, right?
Absolutely, because I saw my mom go to work, come home, go to another second job. And as a child, you take these things in, but you don't really see them in yourself.
Yeah.
And then you get into the workforce and you see that you're repeating the same process.
Yes.
And you reflect back and go, what did my parents not do that I am now repeating in the same process?
Yeah.
And you just have to figure out, if you want something different for your life, you have to do something different.
You must do something different.
And that's where I said, I got to figure out where I'm going.
100%.
Yeah.
So in terms of that struggle, because I could kind of relate to that, it's just, just a little bit of about myself is that my family, my dad, he's an engineer, just like myself. But the way they went about doing things, or he went about doing things, I thought there might be something different. And for me, the different was the stock market.
Yeah.
Right. And I didn't know about that growing up in Grenada. And I know you said you left Jamaica when you were born in Jamaica. Exactly. You left when you were 9 and you moved to Canada. I moved a bit later on. I was 17 at the time.
Okay.
Right. But then I found out about the stock market in 2020 during the year of the pandemic. So what was your introduction to the stock market?
I would say when I was delivering the newspaper.
Oh, so it
because
wasn't
I would
just-
drop off the newspaper and there would be a few extra left over, and I would go home, read the comic section, and then turn to the business section.
Got
and I
you.
would read articles about Robert Campbell. I read article about Seagrams, and I read article about the McCains. And you're like, these people are living a certain type of lifestyle
Yeah.
that is not anything that I'm used to
Yeah.
or even being introduced
Or
to.
the people around you aren't living that life also.
When the majority of the people around you are out Monday to Friday, 9 to 5 working, all you know is the struggle lifestyle.
Yeah.
But the newspaper gave me an avenue to see something that did not exist in my world.
I love it.
Yeah, so from there, I figured, okay, what can I do to get into the stock market? Hey, penny stock seems like a good idea. There's the Vancouver Exchange. Okay, I'll save up some of my paper delivery money and I'll buy a stock.
Yeah.
Okay, how much? Maybe 10 cents, 12 cents. All right, I'll put in my $1,000, and if I double, I'll be good.
It would be amazing.
Hey, but the thing is, you buy these penny stocks and it goes up slightly, 10, 15%. Then it starts to go back down and you go, I'm going to make it. It's going to be okay. Next thing you know, the stock is getting delisted and you lose all your money.
Ooh, yes.
So it's just like, next, back to the grind.
Yep.
figure out what else must be
We
done.
don't let the first mishap derail us from
No.
pursuing what we know works for others. I love that.
I went from being on the Vancouver Stock Exchange trying to buy penny stocks and making money there, losing my money. So then I said, okay, I'll come to the Toronto Exchange.
I got you.
Okay, this is a more mature, it's more handled.
Yep.
And
Yep.
from my reading, you're like, okay, buy low, buy companies that are stressed. So one of the first company I picked up on the Toronto Exchange, I don't even recall the name, but something was going on with the company and the shares had dropped maybe around 50%. So I go, all right, yes, I found one. It's down 50%. And if it goes back up, I would double my money. So it goes down 50%, I get in. It goes down another 25%, 30%. Next thing, stock is being held on hold. And you're like, okay, what does that mean? I'm in all my investing up until this stage, I've never heard of such a thing.
Yeah.
So the stock is being held. Next thing you know, fraud.
Ooh,
Companies being delisted. The owner is being sent to jail. And you, oh, wow.
another one.
Another one.
Wow.
Okay, I can't quit.
Yeah.
The mindset is there. I need to do something more.
I love it.
And then at that stage, I'm saying, okay, I'm not really good at this thing. So what I'm going to do, I'm going to start investing in mutual funds.
Okay.
I'm going to give somebody else my money
Let them
and
manage
let
it
them
for you.
manage it for me.
Yep.
Because clearly, I don't have a clue what I'm
Okay.
doing. So turn over my money to a mutual fund advisor. All right, I'm watching the market. Whatever is going on is going on. But at the same time, I bought one real estate property with my mom. And we used leverage to buy the property.
Really?
Yeah, so we used leverage to buy the property. And about 5 years in, I'm looking at the property and I'm looking at my stock portfolio. Something is not working out here. From my real estate property, it's not a big cash flow we're making, but there's money coming
There's
in
returns.
every month.
Yes.
And from my stock, I'm just being told, oh, it's going to grow, it's going to grow, it's
Give
going to
it
grow.
time.
Okay, I'm patient. I understand what you're saying. But on one hand, I'm buying a property for around $130,000. Now I'm seeing on the market the property is $150,000. Okay, that's 20 grand. I turn over and look at my stock portfolio. It's not up 20 grand. I turn to my advisor and say,
What are we doing?
What's going on here? And she's telling me, I think maybe 5 years in, oh, that's really good. What do you mean it's really good? It's only up something like 1% in all that time. And you're
Wow.
telling me that's good?
Yeah.
In what book is that good?
No way.
So in that time, I'm doing reading, I'm learning, and I'm coming to realize that, guess what? When you invest your money, somebody else is making money.
100%.
When the market goes up, somebody is making money. When the market goes down, somebody else is also
They're
making
still
money.
making that money.
And I'm looking at myself and say, okay, my money is in. The market goes up, I'm making money. The market goes down, I'm losing. So how is it that in 3 of these ways, you, the advisor, is making money, and I'm only making money in 2?
Yeah.
Something is not right here.
Yeah.
So I'm at this stage saying to myself, you know what? You got to figure out what's going on here. So call my advisor. I'm closing my account. Oh, you're going to pay taxes on your... Pay taxes on what?
On the few gains.
Okay, so I'm going to pay a few taxes. All right, I'll deal with it.
Yeah.
So I said, close my account, give me my money. And you know what I did? I went to go buy another property.
Got
Because
you.
at this stage, I'm saying, I have one property and it's generating cash.
And it's showing you results.
Why not buy another one?
Yes.
And that's where I went.
Oh, I love that thinking, right? So instead of just keep going into one direction where it's not working out, you were able to diversify
Yeah.
your portfolio.
Absolutely.
Right? And instead of just a stock market, you introduced real estate, you saw the gains in that because there was opportunity there.
Absolutely.
You might not have known the details, the details as you know now, but there clearly was opportunity and you were benefiting
Well,
from
the
it.
thing is, for real estate, from my view, what is the income? What is the expense?
Yes.
What is the mortgage payment?
Yeah. Simple
What is
math.
left?
Yep. Simple math.
Okay, is it $50? Is it $200? What is left?
Yeah.
And then I'm doing my reading and understanding real estate more. Well, if you have one unit, I am 100% reliant on one person
Yes.
to provide the source of income to cover the mortgage, property tax, insurance, and whatever other operating costs that are necessary. Okay, so if I have two doors, now what happens? Well, if you have two doors, you could have one person covering off the mortgage, property tax, insurance, and a portion of the utilities.
Yeah.
And then you have another income from somebody else coming in.
Yes.
So what's now left? You have more money left.
Easy.
Okay, so you go from maybe making $200 a month, $300 a month cash flow, but with two tenants, hey, what's going on here? I'm making $7,000 to $1,000 a month free cash flow. You don't need to be a genius to figure out that one tenant is very risky.
Of course.
Two tenants is better. Three tenants is even great.
Even
if you
better.
could get that third property. But you figure out these things along the way by learning, by reading, and by starting to try and network with other people. Because in our community, I didn't have a lot of guidance in saying this is what needs to be done in order to learn how to get into the real estate market. But okay, at my time when I got into it, there was a gentleman by the name of Tom Fu. This is for the old school. Tom Fu, and he was doing late night TV shows, and I'm watching. He has the boat, he has the car, he has the home, and he has the ladies. I'm a young guy.
You're like, "Yeah, this resonates with me."
This is interesting. So I go to his conference, and I'm there picking up notes, learning how he's doing buying properties with no cash down. Talk to my friend. Hey, have you ever heard no buying properties with no cash down? Oh, that's a scam. But I'm at a seminar, and this guy is saying this is how you do it.
Yeah. He's explaining.
So there's a mismatch.
Yes.
I'm then talking to coworkers about buying real estate with no money down. Oh, you can't do that. So everyone is saying to me, it cannot be done. I don't know what triggered it into my mind, but if everyone is telling me it cannot be done, what I need to do is find people who could show me
Yes.
how it can be done.
Exactly.
Because it's not so much it can be done. You don't know.
You don't know. You don't
how
have
to
that
do it.
information yet.
So therefore, you cannot tell me how it can be done.
Exactly. I love that the fact that you said that, and you know, we're acquainted, and we are in several groups, you know, whether on Instagram, Facebook, wherever it may be, where we share that knowledge and we try to inform people. And we've noticed that also is that no matter how many times you provide or I provide just suggestions of investing opportunities that are available,
Yep.
they go unnoticed.
Yep, they do. They do.
People don't tap in, they don't care. But the minute you put something out there, people are quick to say it's fake, it's not true, it's a scam.
Absolutely.
This doesn't make sense. How does this work? And they will never follow through to find out the information, to get a little bit more details. It's baffling sometimes how quick and easy it is for people to get derailed.
Absolutely.
Right? From finding something that this is working for us, and here's the information, and rather than pursue that information, they're quick to just brush it off as though
Absolutely.
it's a myth.
Yeah, because one of my good friends, what he was doing, he went out to Durham and bought a property, and he's saying, Rob, you could come out to Durham and buy houses for $130 and $180. Wow, let's tell our friends.
Yep.
$130, $180, and we can show you how to buy them with no money down and creative financing. Oh, that's not possible. But here is my friend that went out to Durham. He bought a property. He calls me up and goes, hey, you're in Scarborough. Come out to Durham. Durham, you know how far Durham is, man?
Wow.
You know, at least back then.
Back then,
From Scarborough to Durham or Oshawa is far. And then you get the comments. It is certain sort of people them that lives out there. The people them are racist out there.
Another barrier, right? So it's another mental barrier that people put up automatically that disenables them from getting to where we need to get to.
And I'm going, are there racist people out there? Sure, but I'm not dealing with them.
Exactly. Isn't there racist
Where,
people
where,
everywhere?
where can I go where there's no racist? Okay, there is. But he's out there buying properties. He's saying, oh, I saw this property, I bought it, this is what's going on. Now I pull out my calculator. What's the income? Oh, you're doing 2 units? Great. Upstairs, downstairs? Great. All right, what is my expense? What is my cash flow? Now, the only thing is when you go out to an area like Durham, you're not going to get the appreciation that you get in Toronto.
Yeah.
So that's understood. But yes, appreciation is great, but it's not money in your pocket.
Yes.
So yeah, your property goes from in Toronto from maybe 2 to 250, in Durham from 2 to 230. Okay, but what did you get in Toronto for, on a monthly cash flow?
Great
You
point.
didn't have no cash flow,
Yep.
but you have appreciation. Okay, you have appreciation. What happens if there's something that goes wrong with your property? How do you cover it?
Yep.
You don't have the cash flow.
No.
I have the
The
cash flow.
Durham property does though.
Can I? How many properties can you afford to buy in Toronto with no cash flow or very minimum cash flow compared to me, who can buy in Durham more properties and more cash flow?
Nice.
Because what cash flow does is frees up to give you more cash to buy more properties.
Yeah, 100%.
You don't have that in Toronto unless you liquidate.
Yes.
So if you're not liquidated, you're not getting that cash. It's in the property.
So I love the fact that you were able to identify the assets that were still valuable, but at a cheaper price.
Yep.
Right?
Absolutely.
And it's not just real estate that's applicable to, that's also applicable to the stock market.
Absolutely.
But we're going to touch on that in a little bit.
Hey, all the way. I'm here.
So what is the biggest misconception about money that you had to unlearn growing up?
Oh gosh, there's so many things that is said around money that you hear as a child. Can I have $10? Money doesn't grow on tree. Can I have $10? Your father is not rich. So, what am I learning?
Yeah.
Money doesn't grow on tree, and you don't have rich parents. Okay, so how do I get money?
Yep.
Back to my paper route understanding. Now, my brothers and I said, well, how can we generate more cash? Well, we could shovel people's driveway. I'm amazed that I don't have anyone knocking on my door in Durham to come shovel my driveway. Because when we were younger, and we couldn't wait for the snow to fall.
Yeah.
Because when that snow fall, the three of us, we got our shovel, and what did we do? Knock, knock, knock. Can I shovel your driveway?
You know, $10.
Okay, $10, $15, whatever it was. We got money in our pocket, so we didn't need to go to our parents and ask for money.
Yeah.
Okay, also during Christmas time, what did we do? What is it, Merry Christmas? Yeah, Merry Christmas, all Christmas carols who were singing, and people, oh, isn't those kids cute? $5. How long did that take? 2 songs, $5?
Yeah.
I didn't factor it out, but money was coming in.
Yeah.
So I'm learning
Of course.
that if you want something, you have to go and get it.
You have
and
to
if
put
you're
the work
constantly
in.
asking someone to provide you with money who themselves might not have the money, you're going to say, well, I don't have it. They don't have it. My parents don't have it. So what alternative is there for me? And the alternative was figure out a way to get my own money coming in. So it is either doing the paper route, shoveling snow, singing Christmas carols. And it's so funny that in Scarborough, we were close to a golf club course. So at one of my buddies,
So you're a caddy.
no, we didn't caddy.
Oh, no?
Well, we did. We went to the golf course and we went into the pond and take out the balls that went into the pond. Now, this wasn't my idea, but my friend is like, hey, you guys want to earn some money? Hey, you're singing my tune. So there we are at the golf course. We're going into the water. We're taking out the balls. Guys just paid, I don't know how much a ball was back then.
Yeah.
And the shop came out, ball went left or right into the water. They're not going in the water for it.
Yeah, they
So
don't know they
I'll
won't.
go in the water for it.
Easily.
I'll wash off the ball and I'll
Resell.
Okay. My friend says, well, they're paying $5 inside for it, so you sell it for $2.50. Hey, I
that.
could do this.
I
I could do this, and we're selling golf balls. We're in the business, but we just have to make sure we stay out of view of the supervisors or anything. Yo, kids, get off the court or get off the field.
Make the hustle work. But hearing this story, it reminds me of a book that I read, Rich Dad Poor Dad.
Absolutely.
Right? So and I tell everyone, people ask me all the time, what's one of the books that you would introduce? And it's Rich Dad Poor Dad. No,
Yeah.
I don't agree with everything Robert, the author, talks about after the fact. But in the book, it's not more about investing, it's just a mindset shift.
Absolutely. Absolutely.
Right? And we're trying to help people, and that's like Money Mind Resources. It's all about building a community where we could help shift the mindset.
Yeah.
Right? If you want a community where you could learn and grow, you have to learn how to shift your mindset instead of being someone who's viewed as a victim of your circumstances, because the way we're born, it's not in our control.
No, it's not.
The environment that we're born in is not in our control. But it's up to you whether or not you want to stay in that environment if it's not a healthy environment.
I have a saying of saying, you're born into conditions beyond your control.
100%.
As an adult, you have all power to control the conditions under which you live. Because I read Robert Kiyosaki's book. As a matter of fact, I read several of his other books. But the thing is, in the first book, you saw the comparison. Here is one person who's a job, Monday to Friday, 9 to 5. His dad, who is, I guess, engineer, whatever, he's working with the government. And here's his friend, who is a business owner. Okay, what is he teaching his son?
That's different.
What is Robert learning from his son? What is Robert learning from his dad? So he's giving you clear comparison of two information being delivered differently. When he goes to his dad and say he wants to do this, no, that can't be done. You're best to go to school, get an education, and find a good paying job. On the other side, here's a father saying, yes, going to school, get a good education is all great, but you have to create a business that generates income. Now, I admit the first business that Robert got into, Kiyosaki that is, was taking, I think it was dollars or silvers and melting them down and go, hey, that sounds a bit more on the criminal activity side. But you saw the ingenuity of trying something that might work. And from there, what did he do? You saw where he then said, okay, he has a certain comic books, and he's going to charge his friends to read the comic books. I had comic books. My friend, we share comic books among each other. I never said to my friends,
"Let me charge you."
But all of a sudden, in my mind, wow, there's people out there who wants to read this comic book. I want to read this comic book. Okay, so I spent, I don't know, $3 for it or $1.50. How about 25 cents? Right? 25 cents and you could read it instead of you go spend $1.50. Sounds like a good business to me.
And it's an opportunity there.
It's an opportunity, and 25 cents that I could now go and buy bubble gum or buy a bag of chips, whatever it was. But it gave you that mindset of, here is how your life can turn out, and here's how your life can turn out as a business owner. And you saw right there in the end, the cruelty of Robert's dad is that the system says, thank you very much. Your service is no longer required.
And you did not get the most benefit from it, right?
And you felt sad because you then look around you and all you're seeing is people that are on that same treadmill. Going to work, doing the best they can, working hard, bringing home the paycheck, trying to pay for, cover their expenses and provide for their family. And because I read that book, I knew the end story. So you're starting to say to people,
we know how that story ends.
Okay, no. This is what you need to do.
You got to shift.
This is what you have to... No, it won't work. Even in real estate, what if tenants call you in the night about toilet? Okay, what if they call? I don't do plumbing. Any plumbers I know, they're not going out at 11 o'clock at night. So I said to my tenants, back then it was call me, leave me a message, and I will address it in the morning. What happened in the morning? I call a plumber. I'm not a plumber. I'm an accountant. I'm going to work. Okay, your appliance is not working. I don't know how to fix it. Here's the person that does appliance repairs. Give him a call, schedule with him, and he will come out and fix it. Everything that was an issue, I found somebody else that can help me along that way.
Which makes sense. And I like how we're combining, the aspect of there's certain people who are business folks and there's certain people of 9 to 5. And you as yourself work a 9 to 5 as an accountant. Did. Oh, that's...
I'm still working 9 to 5, but it's only part-time now.
Got you. Oh, okay. So we got that flexibility. Now, how did that while you were working in that 9 to 5, how did that shape your investing journey thus far?
Well, the thing is, I am very thankful for my wife. Because I would come home from work, drop my stuff, and back out the door again. So you come home, going out looking to find properties, going out trying to address tenant issues. So it was one of those things that, hon, this is something I'm working on for us later on. But in the short term, it's not going to be easy.
I love it.
Yep.
I love it because I'm going through that same Shout out to my son. I'll see you later. After this, I'm coming out. We're going on the side.
So I got home. I just dropped my things, had a quick bite out the door, and it's the same thing on weekends. Because at this time, I'm going to seminars. I'm learning.
Yes.
I'm saying to my friends, hey, let's go to the seminar. We can learn how
Nope.
to do it. No, some did say
That's
they were going to
awesome.
come.
Yeah.
But,
The execution wasn't there.
because, Rob, man, I've been working Monday to Friday, 9 to 5.
I'm tired.
And you want me to wake up 6 o'clock in the morning or
Tired.
7 o'clock in the morning to go for a 12-hour seminar out in Mississauga, out in Brampton, because these things weren't being held in Scarborough.
Yeah.
So, come Saturday morning, are you coming? Oh, man, I'm tired. Oh, I'm doing this with my girlfriend. Oh, I'm doing that with my wife. So, I ended up going by myself.
Yeah.
And you go to these events and you look around and go 30, 40, 50 odd people. And I see 5 people that maybe looks like me in the room. So
If you're lucky too.
if you're lucky.
Yep.
So you just do what you have to do. And I'm going, whoever has the information, I don't care. I'm going to go get that information
100%.
and figure out what they're doing. And it was there that I joined up with REIN, which is a real estate investment network. And the gentleman name, I believe, was Jim Campbell. And he was up there showing what he was doing. And he was also calling up people that's right here in Toronto that's doing the exact same things.
Yeah.
Now, none of my friends were doing these things. None of my relatives were doing these things. No one in my community was doing these things whereby I could see or I could tap into them. But at these investment network, I was able to see people from my community that I could talk and say, you know, it's kind of a bit of a struggle for us out there to get into this market. What are you doing? Oh, here's my lawyer. Here's my accountant. Here's my broker. Okay? Talk to other people who are outside, not in our community, and they supply me the same information.
Yeah.
Okay, how do you finance the property? Well, that's next class. So now you're being taught how to buy homes with no money down. You go and tell your friends, hey, you could buy a house with no money down. That's not possible. Deep breath, deep breath, deep breath. Are you willing to come to the seminar and learn?
No.
No.
Yep.
So back to the seminar, learning these new techniques. I'm applying these techniques. These techniques are working. Telling one of my friends or 2 of my friends what I'm doing in real estate. One of them is already doing it, and he's applying the same techniques.
Yeah. And then you start to see the results. And that's the thing is this, I believe it's almost impossible for you to convince someone
Yep.
to do something different. The best way, at least from what I've seen in my journey thus far, is to do it yourself
Yep.
and then provide the results
But
and
even-
show the receipts.
but
And even that.
Even that.
Even
is-
that.
Because the thing is, when talking about real estate, I'll say, just try and get 1.
Yeah.
And I'll say to them, when you get to 3, there's going to be a blocker. And the blocker is the bank. So I'm saying, get to 3, and I'll then show you or tell you what is the technique that is required to get by that.
100%.
But the majority of Canadians only own 1 home.
Yeah.
And I say to people, think about this way. Real estate is one of those things where inflation is going to push up the costs. So I know, for example, I buy a home, and let's say I buy a home from $200,000. I don't have the 20% down or whatever is required, but I know the technique to get the down payment.
Yeah.
Okay, so you hold on to that home over the next 20 odd years. Okay, so I bought it for 20 or 200,000. I know in 20 years it's not still 200,000. And even if it's 200,000 or 20 years from now, guess what? There's no mortgage.
Yes.
And now
Great
what do I
point.
have? Cash
Cash
flow.
flow.
And you have seen what has happened to real estate in Toronto over the last 10 years. And I'm saying that $200,000 house is now valued maybe $1 million.
Yep. I was about to say 8 it depends on the area, but you're
8 to $1 million.
Yep,
And I'm
easily.
saying, how much of that money was mine? Well, I surely did not put down the 20
200.
grand.
That's
The
what,
200,000 didn't come out of my pocket.
Yep.
But now who owns the property?
You do.
In retirement, guess what I have? Cash flow.
Yep.
And what does that cash flow provide me? Opportunities.
Yes. And that
And what
flexibility.
And what does that opportunity provides me? In case inflation take a big spike like what we saw 2 years ago or 3 years ago,
Yep.
guess what? I can increase rent. Now it's set and controlled by the province, but I can increase the rent.
100%.
that puts back more money into my pocket.
So we want to talk about. So we touched on so many points. I'm trying to figure out how to put this all together here. So the question is, was there a turning point in your life? But it seems like your whole life was a turning point.
It was.
Right. So my question is, what are two pieces of advice that you could provide someone to help create that turning life moment for themselves? What would you recommend right now for someone? Let's just say someone in their 30s or 40s who is, we're not out of retirement, but we should be thinking about retirement and to create opportunities to build wealth. What would be two strong pieces of advice you would provide here?
Well, before I answer that question, my biggest turning point came when I was off work for 2 days.
So we do have a turning point.
Yes.
Great.
I walked into work and I look left, I look right, the desks are empty. There's nobody sitting there. My supervisor is in her office. Okay, everything is quiet. Where is John? Where's Paul? They're not here. Phone rings. I need to speak to you. Okay, and this is my supervisor calling me. Walks into her office. Need to let you know that we have let go a number of employees on Monday because I was away for 2 days.
Wow.
Okay, reflect on myself. What am I doing at this stage in my life? I have one property, but guess what? I have a lot of debt. I came out of college and I thought I knew it all. All of a sudden, I went out and bought a brand new car because I didn't want to buy a car that somebody else was driving before. And I put down the lease amount. And when you put down the lease amount on a brand new car, guess what?
Your payments are high.
Well, you don't even think about it in that way, but when you're at the dealership, your payments is only, let's say, $400.
Okay.
Okay, I can manage $400. Then you contact the insurance company. Oh, young driver.
Yep.
All
Premium
right.
or not.
Your premium is going to be $250. Well, that's getting up there.
Yeah.
But still can manage it. Oh, by the way, you need to put gas in the car.
Tires.
You need to do service on the car. All of a sudden, one check, because I'm getting paid semi-monthly, is gone.
Yeah.
Okay, I'm still living at home. So I'm really, really thankful at this stage. Because now I'm saying, instead of having 2 checks to do whatever I'm doing, I'm now down to 1 check. And I'm nervous because I have car debt, I have credit card debt, and I'm living the life.
Yeah.
I'm young, I got a car, I'm not bad looking. I'm out with my friends Friday night, Saturday night, Sunday night, enjoy life.
Yeah.
At lunchtime, I'm going and having maybe a liquid lunch and picking up something to eat. All of a sudden, I find myself living paycheck to paycheck and credit card to credit card. And because I saw those people lose their job, I'm like this. Oh my gosh, what happened if I lose my job?
Yeah.
I'm screwed.
Yeah.
The car is gone. I'm in debt. What am I going to do? So I am nervous. And I become the person that I am not. I'm angry. Why did the system do this to me? Why is this happening? A new CEO comes to the company.
Changes everything.
And without even knowing the story of any of these people, you are gone.
Yeah. They have families.
A
they
director
have lives.
that I know is there, works her way up from a typing clerk to a director, making good money. Things are going well. Gone. This is the only place she has ever worked. Didn't matter.
Mm-hmm.
Somebody came and made a choice for you. And now, what are you going to do? And I'm saying to myself, that could be me. And that's why sometimes you have to see yourself in someone else's shoes and say that if you don't change your ways, this is what you're going to end up. Because I didn't leave college in debt.
Yeah.
Yes, I had a small student loan, but I'm paying for it. But now I'm so nervous that if the phone rings and it's the supervisor or anything,
You're
I'm nervous.
Yeah.
I can't eat properly. I'm losing weight, and I'm stressed out.
Yeah.
This is not the best Robert that you want to know.
And then your wellness is affected because when you don't have that financial security mentally, it impacts and it overlaps and
Yeah.
overflows into all aspects of your life.
Everything else becomes a scarcity mindset of survival. And that's not who I want to be. That's not who I wish to be. But this is the stage, I don't know what propelled me to go to the Eden Center. And I'm walking around looking in the business section and looking at books. And I come across the books that Think and Grow Rich by Napoleon Hill. Well, Think and Grow Rich. I don't see this guy talking about money in this stupid book.
Yeah.
But something said, buy the book. Go home and start reading the book.
It's a new mindset.
And all of a sudden, I'm realizing that you have allowed so many things outside of your life to influence you. But you are not taking control of the things that are within your life that you can control. And all of a sudden, your mindset start shifting. You start seeing things from, okay, you can lose your job at any time. What are you doing today so that in the event that happens to you, you're ready?
Yes.
Well, at that stage, I wasn't doing anything. So it then starts to, okay, real estate is on the way, but it's not there yet. What else can I do? Back to the stock market. Again, I said I had closed off my RSP account, pay Revenue Canada their share, and I'm saying I'm going to couple real estate and the stock market together. But this time in the stock market, I've been reading.
We've been learning.
I've been learning.
Yes.
And now I'm saying, okay, before you invest in a stock, you have to create your own financial statement. Well, I'm an accountant. So I know what a financial statement looks like. Here's my assets. Here's my liabilities. Here's my equity. Okay, good. Now, let's look at your income statement. Here's my income. Here's my expenses. Here is maybe your net after everything is spent. Can I now take this and put it over another company?
Yep.
Yes. I look at another company. Man, look at the debt this company is having.
Makes no sense.
Makes no sense.
Yep.
I look at their final income statement and I'm going, shaky. But look at the margin. Good
Great
margin,
margins.
bad margin. I now know what good margins look like.
Yeah.
I now know what a good financial statement look like.
Yep.
Why? Because I've put together my own financial statements.
Yep.
Cash flow. Well, cash flow is what's left over. I now know from my cash flow, what do I have left? What am I doing with that cash flow that's left? After everyone has gotten paid, what am I doing with what's left? Hey, look at the financial statement of a company. What do they have? Cash flow. There's 3 statements: your balance sheet, your income statement, and your cash flow.
Statements.
Every company that's publicly traded has those things.
Publicly available information, everyone. This is not a secret. It is out there. You could Google it. Every company.
Every company that's publicly traded has those statements. So now I could take what I have learned from my own statement, take what I have also learned from looking at good companies, right? And looking at some companies, I go, well, you only have a net of 3. You have a net of 15. 3 versus 15. Okay.
One's larger than the other.
Which one should I go with?
Yep.
I'm looking at the 15 and I'm seeing what we refer to in the stock market as a hockey stick. It starts off like this and it's just going up.
We love those charts.
Oh, so am I buying resource companies with maybe 8% margin? Nope. Am I buying retail companies with maybe 3% margins? No. What am I buying? I'm buying technology companies.
With the 60, 70, 80% margins. We know those.
So I'm saying to myself, I know what to look for.
Yep.
And I go across and look across all the various sectors in the financial and saying, where should I be investing? And right there, I could see straight in front of my eyes who has the best operating margin, who has the best gross margin, who has the best income. And I'm saying, stick to the ones that shows a way of making good money. And then you keep on learning. And then you find out what is the moat that these companies have.
Yeah.
And what is the moat? How hard is it for you, Drake, to get into my business?
100%.
It's a funny story. I'm in Inn Center and I'm going to pay for something. And I'm at the counter and I notice person takes out their credit card, pays.
I wonder what's on that credit card. What brand is that?
Person takes out another credit card, pays.
Might start with a V.
And another person comes up and they pay. Hey, everybody's using Visa.
Visa.
Everybody's using MasterCard.
MasterCard.
And maybe the odd Amex. Okay. So what does that tell me? Go home and pull up the financial statement for Visa. Pull up the financial statement for MasterCard. Pull up the financial statements for American Express. Now, there's other cards out there, but those aren't the cards I'm seeing everybody around me using.
Yeah.
Pull up the statements and you tell me you have a 60% gross margin and you have a 40% net margin? Okay, something is not right here. These numbers are correct. So you are right. Buy good quality companies, hold them for the long term, and you will make a, pardon my French, load of money.
Killing. You definitely would. So I like the fact that you brought back the stock market into it. And one of the questions that I got here is with between real estate, the stock market, and let's say options. How are you viewing that, and how would you suggest to others to view if they want to get into investing? You know, options not for everyone. You know, it's a bit more risky.
Yep.
But how do you view that in a nutshell?
I think all three is necessary because one thing that real estate provides me is that consistent monthly cash flow. I could also turn over those real estate properties to my children.
Yes.
Now, you could turn over your investment portfolio also to your children. But one of the things about when you're investing in the stock market, let's say you have 100 shares in something. You're either collecting monthly dividend, and if you're not getting monthly dividend, the only way you get your money out is by selling.
Yeah.
So you have 100 shares, you sell 10, now you have 90. Your dividend is going to be less. You need more money. Sell another 10 more. So what you're doing is depleting your position in that company. The dividend keeps on going down. But in real estate, guess what? The money is not being depleted.
No.
Cash flow is coming
It's still
in
there.
on and on and on. While in the equity market, it's being depleted. But I don't remember at what stage I got into the option market. But it might have been during the financial crisis or something that happened that I'm looking at my portfolio. Before I tell that, I got something I gotta tell. Leading up to the .com situation, I thought I was on a roll.
Yeah. Everybody's winning.
I put in $2,000. 3 months later, I'm up to 6. I'm up to 7. Oh, put more. You know what? I got a brilliant idea. I got a credit card with no balance on it. I'm going to take what's on my credit card, take a cash advance. I'm going to put it in the market, and I'm going to make a lot of money because I'll sell it in 3 months' time. I'll cash out. I'll clear the credit card. And while I'm putting the money into the stock market, I'm leveraging.
Oh, okay.
I'm doing margin on those positions.
Wow.
So I'm taking, let's say, 10 grand, and I'm getting 15 in the market. Now, you know the rules of the game.
Yeah.
But the game is in my favor at this moment. And hold and behold, the markets crash.
The pop.
And my phone rings. And on the other line is TD Bank. Saying
Margin
that,
call.
Mr. Dockery, you need to cover your position. I'm back to that nervous position again. No, I'm not fully worried about it. But now I'm being locked out of the market. Because guess what's going on over here on the credit card? They need their money too.
Yep.
What's going on over here in the stock market? That's being wiped out. So I'm now have to sell to cover TD.
To cover your
or
positions.
TD is liquidating my position faster than I can because that market is tank. Maybe the market went down 20, 40, or 50% at the time during the dot-com crash.
Mm-hmm.
So I now have to come up with capital to cover off my credit card. I now also have to take any money from my real estate to cover up the credit card. So I'm being locked out of the market very severely for an extended period of time. But during that time, I'm reading the newspaper and you hear certain individuals made X amount of money
On the
during the
downturn.
crash.
Mm-hmm.
And I'm going, how is it possible that I'm losing so much in the market crashing, and on the other side, there's people making money? Something needs to be learned.
Yeah.
Now, you could just, oh, it's just the market. And it is just the market. But what are you going to do?
Yeah.
So that was the stage where I then said, okay, let's get into option trading.
Because you could make money both ways, on the upside and the
I
downside.
could make money both ways. But the thing is, when I first got into option, I guess it was from my teaching and maybe not fully understanding, but I'm doing short-term trades.
Mm-hmm.
I'm in maybe for a month, 30 days, 60 days max. And I don't know, maybe I missed a lesson, but I didn't understand how fast option depreciate during that period of time.
Yeah.
So I'm losing money again in the option market. So this is not working out for me. But I did not walk away. Lesson, you need to learn more.
Yes.
So I'm learning. And by watching EYL, this guy comes on and he's talking about the option market. And he's dropping $500 as donation to the group. Then he comes on live one day and says, if you want to follow me directly, his name is Mark Monroe.
Shout out to Mark Monroe,
He says, come on over and I'll teach you something.
the legend.
So I'm in Mark Monroe training session. And he's saying that what we need to do as option traders is look more at leaps. Now, I'm a long-term investor. So of course I understand the value of whole time
Yep.
and compounding in the stock market. But somehow when I got into options, it was all short term.
Yeah.
And didn't do that well my first couple of times trading options. But with Mark, he refocused me
On the long term.
buying quality companies and holding them for the long term.
Yep.
Why didn't I think of that?
I know.
You've been buying long term all this time, and now you got into option and you want to make that quick.
so simple, but it really, when someone presents it in a different way, then it opens up another world of
Yep.
opportunity.
All of a sudden, I'm constantly losing doing short term. And he's saying, buy good quality companies when the market provides you an opportunity and hold them for the leap, maybe a 2 year, 1 year, but hold them for a longer period of time. Duh. I have companies in my portfolio that I've been holding since the dot-com crash. You're still holding them. Look how much you're up on those ones. And here you are taking your money, putting it into short-term option and not doing. You win some, you lose some, you win some, you lose some. But overall, you're not making any progress.
Yeah.
So switch up the game and now start doing leaps.
Game changer.
Hey, game changers.
Game changer.
Because all of a sudden, I'm a very patient investor. I have a long-term point of view. So I could now sit back and go, when I was looking at stocks, when was I buying? When the market is crashing.
Yes.
Because I don't understand the concept, or maybe I understand the concept of what people are saying of dollar cost averaging. But I say to myself, Warren Buffett, when does Warren Buffett buy?
At the dips, when the companies are, or good companies are trading at a cheaper evaluation.
So why am I being told to do
buy the
dollar
high.
cost averaging? I'm looking at a company and okay, it trades at a PE of let's say 80. Okay, is 80 high? Excessive? But where does it trade on average? Maybe a 30. Okay, so when am I buying?
When it's closer to 30.
Margin of safety.
Yep.
So when companies are flying, I write them down. Okay, where's the high? Where's the low? What is the average PE in this company? And where does that company trade in relationship to the PE? Okay, so when the market is going down, I just sit and watch. And I see 10% go down, 15% go down, 30% go down, 40% go down. And then I perk up. I go, all right.
And
This is where I start to buy.
Yes.
Because I know that from my reading, the market will correct a minimum of 5% every year, 10%, 15%. And the odd time, it'll give you that 30 or more correction.
That bear market.
That bear market. Because in 2020, when the market crashed, people are going left, right, and center. The whole entire world is falling apart. COVID is crashing everything. Thank you.
While you're selling, we're buying.
I love red days.
Yes.
And that's the thing.
I look
because
forward to those more than anything else.
now the thing is, I'm still contributing to my account monthly.
Yeah.
But I'm just sitting waiting.
Yeah, we just got the funds waiting to be able to
I
execute.
know it will happen.
Yes.
It is a guarantee that it will happen. And we had a correction with the tariff where our gentleman to the States, to the country beside us, caused the market to crash. And what did I do? Thank you very much for bringing down some of my favorite company. So I'm buying some long position in shares, and I'm buying leaps in those same positions.
100%.
Yep.
So I love how, regardless of the things, like especially with the stock market, because it seems that real estate was a better, safer bet at the time,
Yep.
right? And then with the stock market, whether it's options, whether it's shares, there was some difficulties, there were some challenges, but you didn't give up.
No.
You kept learning, you kept that perseverance, and you kept pursuing. And then afterwards, you found out about the option market to help try to limit your downside
Yep.
and still make money on the long-term horizon. And
Yep.
keyword long-term.
Absolutely.
Right? Now, in today's economy, and this is probably the most important question for today. In today's economy, considering the fact that real estate market, like someone like myself, someone who's young, we don't have $150,000, $200,000 property being available to us right now, at least not within close proximity, right? How would you advise someone who is looking at getting into real estate versus the stock market right now?
Well, there's different viewpoints that are out there. And one of the viewpoints regarding real estate is you need to be close to your property. I understand. Because at one point, I was in Scarborough and we own property out in Windsor. And it's a good 4-hour drive. But that doesn't mean you cannot own a property that's far away from you.
Yeah.
You just have to have the right property management
To be able to handle that.
You just have to make sure you have the sufficient cash flow to cover off the expense for somebody else. But I have friends that own properties in the States.
That's true.
They're not over there every month.
That is true.
They maybe go by every 3 years, not 3 years, every 3 months or 6 months, but they're not constantly checking in. There's a system in place.
Yeah.
So if where you're living you can't afford, there's nothing said that you can't buy somewhere else.
You could look outside, but then still have the mindset that cash flow is important in that situation.
No matter where your properties are located, they must cash flow. Yes, I hear people on appreciation, but I'm going, appreciation doesn't pay the bills.
Yeah.
Appreciation doesn't give you the opportunity to buy more properties unless you're liquidating or refinancing. So I prefer cash flow.
Yeah.
Yep.
I agree with that. So if you were to start over right now with everything that you know, the knowledge in that brain from the amount of books and videos and resources you've gathered, what would you do different today?
What would I do differently? I'm not certain if I would do anything differently. And because the fact that certain things had to happen in my life for me to learn certain lessons. So I look at the journey and go, each step was a lesson.
Yeah.
So if I say I'm going to change this,
I love that.
I might then lose the lesson of what I needed
And it
to
might
learn.
cost you a bigger mistake down the line. I love
Because
that.
I know to separate bad investment property from good investment property. How did I know that? Well, I bought a property and I had a great idea that I was going to convert it and make it 2 units, to which the city says, no, Mr. Dockery, you cannot convert it. Well, somebody says, maybe you should have checked with the city first.
Yeah.
Okay, lesson learned. But if I didn't learn that lesson, I wouldn't have known. Okay, losing money in the stock market. I wouldn't have learned about Vancouver. I wouldn't have learned about buying companies because there's bad news going on in the company. And it wouldn't have then show me the way to look at good quality companies. So each time a bad lesson has led to a better lesson.
100%.
And the thing is, you have to learn from these things and move forward.
Yeah, I really love that because in my journey as a trader, I like to say I'm a full-time investor and a part-time trader.
Yep.
And I believe in there's more value in buying shares. And then I will still use the option to be able to help mitigate some risk
Yep.
to the downside and even to the
Yep.
upside. And I really love that aspect because when I started trading, it wasn't profitable one time, made mistakes, had to learn, but keep perfecting the process and learning on that and developing on that.
Absolutely.
So this is where I would say Your journey, it gives me a lot of joy to see,
You're
and it
welcome.
gives me a lot of enthusiasm to continue going. And I just want to make it very clear. Nothing Robert has shared with today is due to luck. Nothing was luck. It was somebody who was being persistent, somebody who was trying, somebody who was open to learning and keep going. With that being said, what are any books or videos that you would recommend for the viewers today? And one also thing, why would you say patience is the most important aspect to this whole long-term journey of building wealth and investing?
Okay, I'm going to have you restate that question in second part. But the first part of your question was
What are any books or videos
books.
that you would recommend to anyone?
I'm always learning.
I know.
But I say to individuals, read Think and Grow Rich by Napoleon Hill.
Got you.
Also then read Think and Grow Rich, A Black Perspective by Dennis Kimbrough.
I don't know about that one.
Because sometime image that you see, people that you know that look like us, influence us more. We might not think it, but if I see in my eyes somebody who looks like me or from my community that looks like me, I can inspire to that.
Yep.
Now, I can inspire to what somebody else is, but I don't see it in my eyes the same. So those are two essential books that I say to individuals to read. And Rich Dad, Poor Dad, the first one, it's in there. And one of the things that I took away from that book, for everything you want in life, find somebody else to pay for it. So real estate gave me the money to pay for my life, for the enjoyment that my family is able to provide. Stock market is given that to me, but not as the same way as equity or option is given it to me. So somebody else is paying. Another book that I like is The Richest Man in Babylon.
Got you.
By George Clarkson. And that is where a part of everything you earned is yours to keep.
Yes.
So many people, I don't earn enough. I don't earn enough. And you tell them, okay, cut these expenses. I still don't earn enough. Then I would say, okay, try and increase your income. But the basic concept of saying a part of everything you earn is yours to keep says to you, pay yourself. When my paycheck comes in, I don't even get a portion of it. It goes directly into my investment account.
Yep.
I don't have it. I don't spend it.
Yep.
It's allocated to somewhere else. And this is where you brought up a part about income creep or expense creep, whatever it is, is the understanding that as you get more, you're going to want more in life. And there's nothing wrong with that. But at the same time, you cannot push your expenses up to meet your new income because you won't have anything that you're saving.
Won't have the
and that's why
disposable.
from that, I'm saying, if you got a $20 pay increase, whatever it works out to after tax, half of that is yours.
Yep.
Half of it is
100%.
here. You were living last year without it. Now you've gotten extra. Take some of it and it's yours.
Yep.
And every paycheck I get from my full-time job or my part-time job goes into my investment account.
Yep.
No question. It's automatic.
I love it.
CIBC, TD. CIBC, TD. It's clockwork. I don't think twice about it.
I love it.
Yeah.
So those are important aspects to take away from this entire conversation. I do appreciate you.
You're welcome.
I promise you this won't be the last time we have these conversations. We meet up on a yearly basis to just, talk and try to build a community with people, especially within the GTA, to build and to learn and to keep everyone, try to hold people accountable so that they could pursue that life that we all deserve.
Yeah. It's a good life. But it's only possible when you're willing to put in the sacrifice and the work necessary to accomplish it.
100%.
Because if you have an income, you have a chance. If you don't have the income, then I'm going to say, figure out a way to get the income. But if you have an income, you have a choice.
You do.
You could give Rogers their share, cell phone their share, utility company their share, your landlord.
But where is your share?
Where is your share?
Where is your share for your future self?
You worked for it and you have allocated out everything to everybody else and you have left yourself with nothing.
Okay. That is beautiful.
You got to change it.
You do. And we're going to constantly keep challenging that. We're going to keep pushing that message out there.
Absolutely.
If Robert is a low-key guy, so it's no social media to handle here, but you definitely, I will have him back on. I really do appreciate it. I love the conversation. If anyone is interested in getting into a community where it's like-minded individuals, right now I've put it out there. I will be a millionaire. It's not a question. I've done the math.
Absolutely.
And within the community is like-minded persons like myself who we are constantly learning about the different markets. So not just stocks. We're also looking at real estate. We're also looking at ways to take the stock market and leverage it into real estate, because the dynamics between Robert and myself is that real estate is 4 times more expensive or 5 times more expensive when he was on his journey compared to myself. So now the stock market is one of the easiest way for persons to start building wealth, because you really and truly just need $20 and a bank account and a brokerage account and investment account, and you could get going and you could start your journey. So with that being said, Robert, thank you again for the third time.
You're welcome. You're welcome. I hope it changes the mindset out there.
I really do. And we're going to put out this message. We're going to blast it all over social media. I hope everyone take the time, click the like button, click the subscribe button, because here at Money Mind Resources, invest smarter, earn more, and live free. I catch y'all on the next episode. Thanks, everyone.
Excellent.